But while retailers expect to see a surge in crowds, they are facing a more frugal shopper this year. With us now at Post 9 to break down the holiday expectations amid the macroeconomic uncertainty is UBS senior retail analyst Michael Lasser. It is confusing because we hear all about, the low to middle income consumer getting worse. We hear about uncertainty. We hear about tariffs. And yet we're expecting growth year on year. So how do you characterize what's happening with the consumer?
The way we would characterize the consumer is stable but choiceful, and that's been the case throughout the last several quarters and much of the last few years, where the consumer's coming out for events, and in between those periods being a bit more careful with their spending, and we would expect the same this holiday season.
Is Black Friday one of those events?
Without a doubt. The Turkey 5 holiday weekend is going to see some pretty strong sales. And then what has happened is the drop-off post those periods tends to be deeper each progressive year. And that's going to be the case this year as well.
There were questions about how deep the discounts would be because tariffs. What are you seeing so far?
So we heard from retailers like Dick's Sporting Goods and Best Buy as recently as earlier this week that they expect a more promotional and deeper discounts this year than last year because the consumer is under pressure, being really sensitive to those good deals.
And that goes against the inflationary story.
Well, what's happening is retailers are taking prices up, and that's providing a little bit more cushion to take some deeper discounts around those key events because the consumer is so sensitive to what they're spending right now.
We were talking during the break about the explosion of ads during football yesterday regarding not just retailer ads, but ChatGPT ads and providing examples of how you would use it to shop. Is the story still about long-term margin compression because it can hunt for deals better than you or I can?
Yeah. This is going to be the last holiday season before the pervasive use of agentic commerce, artificial intelligence becomes widespread. If you're not using it today, you will in the future to assist your holiday shopping experience. We're going to have agents who stand online to get those deals instead of we can enjoy some warm weather in the holidays. It is going to make it more competitive because some of the pricing will become more commoditized and much more attuned to everybody. So retailers are going to have to adjust to a different environment quickly.
Well, how do you see that adjustment playing out, let's call it over the next year, given you think a year from now we're going to be having a somewhat different conversation?
We are going to have a different conversation. They're going to have to continue to evolve the profit pools. For example, retail media, trying to sell advertisements has become so much more important to the profitability of retailers. You've heard that consistently over the last few years. That's an example of how these retailers are trying to adjust their models in a world where pricing becomes more ubiquitous for every retailer. So we're going to see that become much more important over time.
Who's the winner?
Who's the winner? Yeah. It's going to be the large, well-positioned players like a Walmart, a Home Depot, a Costco. Those are three retailers that continue to stand out, lead in the deployment of technology to assist
What about
the
Target?
consumer.
You didn't mention it.
Target is quickly trying to change and improve its performance. We believe as far as the stock, the probability of successful improvement with Target is greater than what's being priced into the stock. So that's why we still like the stock from here, but it's no doubt had some difficult times as of late.
Yeah.